Next up, we have Zeder, which is a PSG Group holding. It's established listed company which invests in the unlisted agricultural, beverage, food, and other agri-related sectors. It has a market cap of 13.2 billion rand, a price-to-earnings ratio of 41.5, and a dividend yield of 0.6%. So when we talk about Zeder, essentially we're talking about Pioneer here, because that's the bulk of the earnings. I think it's about 75% of, the sum of the parts game.
Correct.
Before we go focus on Pioneer, let's look at their other businesses. There's Capespan, and I think they're looking to buy the rest of that business.
I think they have already bought it. There was a cautionary out where they're going to buy more of that business.
And offering the rest of the shareholders Zeder shares.
Correct.
Using their expensive scripts. So that's always
that's almost been their business model, is to use a 41 PE share to buy other businesses. Now, when you take Pioneer and Capespan together, I think that's probably 92%. So the other parts of their businesses are actually very, very small.
And just to quickly cover that, that's sort of retail in the agricultural market, so selling machinery and clothing and that sort of stuff, and a few seed businesses. So
it's really it's Pioneer and Capespan. And Capespan is spanking brand new. The additional, the big, I think it was 4 billion odd rand, they're going to go into that. That's actually, those are the two big ones.
So why would you buy this one instead of just buying Pioneer? Because I actually plotted the graphs, and they're pretty similar in the performance.
They would be.
Explain to me how, because it's a management company, there's Zeder pay a fee to PSG. Explain to me how that works. I think it's up to 180 million rand for the outperformance of the food manufacturing.
There is a performance fee in there, to be honest. I'm not entirely sure what the mechanics of it are. But obviously Zeder now trades at a discount. That's why you would buy that rather than buy Pioneer. When you actually have a look, ignore the PEs and that, it is a holding company. And you look at that, you can probably get Pioneer cheaper through Zeder than what you can go buying Pioneer directly. And of course, if you want the PSG magic, you'll go for Zeder rather than Pioneer, but obviously it's a lot smaller company, so there's far less trade in Zeder.
Exactly. So I guess you're banking on the other businesses within the Zeder stable to start becoming more significant. If we have a look at the share price there, we can see it's been a great story. Obviously, the Pioneer story has always also done really, really well, and they've also got that small stake in Quantum Foods, which Pioneer unbundled. The Pioneer story, Phil Roux doing a great job focusing on brands.
The last set of Pioneer results were fantastic, and that's where this company, Pioneer, is very different to the other food companies. This is essentially a fast-moving consumer goods company. They've got well-established brands. A few of their brand clusters have done, or product clusters have done extremely well. Their last set of results were certainly above my expectations and probably the market's expectations. But at the end of the day, if you're buying Zeder, you're buying Pioneer, because it's just so big in the business.
I know, when you're quite value sensitive. Now, PE of 40, Pioneer's fairly expensive as well. I
would be a little bit cautious here. I think the SA consumer is not in a good shape whatsoever. Input prices are going up. I would be a little bit cautious, but longer term, I would actually want to own it. So maybe go hot. Maybe just sit back and say, swallow your value bias and actually go hot on this one.
And sort of stick to that Yanni Maton PSG magic. They're great corporate financiers. You expect
and it's still in the growth phase,
and
they tell you we're going to concentrate. They actually, in their company write-up, they say, listen, we're going to concentrate on bedding down the businesses we've got. And in the next sentence, they say, but if anything else comes along, we're going to buy it. Okay, so
exactly.
You'll see.
And we've seen many examples of businesses that own big stakes, and that's, their significant income, but then they slowly diversify away, and that becomes less and less.
It's trading capital at the end of the day.
We do own a position in the portfolio. I agree with you. We're hot on Zeder. Let's go to the next one.